Now for global business updates, Rotus Oddiri joins us. Good morning, Rotus.
Good morning, Dr. Bati. Good morning, Vimbai. Good morning. If I like the green, the shades of green. Yes, the shades of green from the two of you here. Good morning. For our viewers out there, we begin with the U.S. Lots of data today. Data from the U.S., Ghana, and Nigeria. Tariffs are yet to reflect on the inflation over in the U.S. You can see the headline month on month coming in at 0.1% from 0.2 in April. Year on year, it came in at 2.4, so it increased by a percentage point from 2.3. Core inflation decelerated. Core inflation year on year maintained its thing. But rather than rattling off numbers, the thing is that we're still seeing importers front-loading their inventory. So you still have pre-tariff inventory that's still being sold off. If we look at some of the categories, some of the biggest movers in the inflation basket for the U.S., you'll see energy declining. You were just talking about oil a moment ago with the whole Iran situation. So oil has come down because you've seen oil averaging $60 a barrel compared to this period last year. So 2.6% drop there. Apparel, that's coming down as well by 0.4%. We thought that would be impacted, but it looks like some retailers are still eating a percentage of their costs, are not passing them on to consumers. Same thing with new and used cars. That was a surprise. That dropped as well. Airlines, that one, no surprise. We've seen less travel with all the tensions going around. People saying, Canadians saying they won't fly to America. People in Central America and stuff, so forth. Minus 2% there. But as far as housing, that was, I think, the biggest contributor. But the point is, so one, pre-tariff inventories are still being sold. Retailers are still eating a percentage of their of pass-through costs to consumers, and that's why you're seeing that inflation has moved. But we are getting to the stage where, because these tariffs are staggered, we will likely see this pass-through effect coming in later months. So it's been estimated that U.S. inflation could end up at around 3%, which is why the Federal Reserve is not going to make any moves. Let's move to Nigeria. Foreign trade in goods data was released by the Bureau of Statistics yesterday. We recorded a 5.7 trillion naira surplus in the first quarter of the year. So if you look at your total trade, 36 trillion. You can see exports accounting for, I think, about 65% or so of that pay figure, 20 trillion. Imports at 15. You subtract your imports from your exports, you get your trade balance at the bottom there of 5.1. Sorry, did I say 5.7? 5.1 trillion, excuse me. So that's grown. Taking a look at what made it up, I mean, again, you will see a similar theme between Nigeria and Ghana in just a moment. It's still crude oil, making up about 65%. So your 12.9 trillion in exports of crude oil for the first quarter out of your total exports of 20 trillion. That is still the bulk of it. Even non-crude oil exports, which contain, LNG, liquefied natural gas, and other things, 7.6 trillion. And then non-oil, where you get into agricultural items, that's at making up, I think, about 15% of your total export. So again, the theme here is that Nigeria is still heavily dependent on crude oil exports. Going to, I think, our top trading partners. The Africa Continental Free Trade Agreements and the talk about trading within Africa, that is still the story here, because again and again, these numbers reflect that we still do not have, I think as of this quarter, I think South Africa made it in the last quarter or so, but top five in terms of exports: India, Netherlands, US, France, and Spain. As far as imports, look at the dominance of China. 30% of the total share of imports. Sorry, can we go back to the charts? Okay, yeah. So, or the table rather. So 30% of that total share of imports from China, and then you've got India, the US, Netherlands, and then of course, this is why Donald Trump and the rest of the Trump administration is so all up in arms in terms of the dominance of China in terms of trade. Agricultural products, I think we did about 2-point-something trillion. But in fact, total trade to other African countries made up only about 1 trillion in the first quarter. We imported about 766 billion. Again, it was mostly oil. So the main takeaway, we're still commodity dependent. Moving to Ghana now. Healthy GDP growth. Mr. President Mahama is going to like this a lot. In the first quarter, 5.3% year on year for Ghana. And if we quickly just go through some of the metrics here as to what contributed it was services, the services sector. I mean, this is like almost 48% of economic growth for Ghana. Q1 was 5.9%. Of that, the ICT sector grew up by double digits at 13.1. You've seen a similar theme here in Nigeria. These countries are, slowly getting becoming more digitized and trying to grow there. Moving further from the services sector over to we shouldn't have this. We should have agriculture, industry, and some other sectors. But by and large, okay, here we go. So here's agriculture. Almost 40% of the workforce, 6.6% growth. Fishing did 16.4%, but the story here is cocoa rebounding after about 5 or 6 quarters of contraction. January through April, cocoa exports rebounded to $1.8 billion, contributing to Ghana's balance of payments. Gold, we talk about gold a lot. Gold also, the trend of the increase in the spot price of gold, Ghana being a heavy gold exporter, that also contributed to its GDP growth as well. So if you look at industries there, the industrial sector, 3.1% growth, 3.4% growth. You see Ghana's gold sector expanding by 5.6%. Look at their exports for gold, $5.2 billion. Manufacturing also grew by 6.6%. So that's generally been the theme. But again, if you look at it is still commodity-based for Ghana. So it is still gold, it is still cocoa, it is still basically the main drivers for the expansion of growth there. So by the way, the CD has appreciated, I think as of the last week, by about 43%. It was a few days ago, it was one of the best performing currencies in Africa. And then finally, yesterday I talked about the Bureau de Change operators in Nigeria wanting to get an extension on this recapitalization drive. The CBN in Nigeria is trying to sanitize the sector. Basically, from 35 million for a license, they've increased it to 2 billion for a tier 1 license. Tier 2 is 500 million. The first deadline was December 2024, extended it to June 3rd. They've come out and said that there will be no extension. So if you're going to lose your license if you're not able to gap up to that. That's our update for today.
A chunk of change. Thank you so much.
Thank you.
Tomorrow we can bring Ghana back. We need to talk about what Ghana is doing.
We'll break it down.
It's just for you to note that Elon Musk is already apologizing to Donald Trump. He says he regrets all the things that
we took it yesterday.
That he said. That was reiterated again. And the U.S. is saying that tariffs against China will remain at 55%. 30% plus 25% on other tariffs. And markets in Asia are mixed as a result of that. The indexes on Wall Street have gone down, also as a result of that. As investors are trying to further monitor the uncertainties in the market. Thank you very much.
Thank you.